Hello everyone. We are very happy to have all of you that joined us, our guests and our viewers. Thank you very much for being here today. My name is Ilmar, and today I'm going to be your host. I'm a business development officer at KYC ML Guide, and this is the first of our webinar series presented by KYC ML Guide. And the topic is of today's webinar, demystifying travel rule and its implementation for the businesses. Like several other countries already, from 1st September 2023, crypto asset businesses in UK will be required to collect, verify, and share information about crypto assets transfers, which is known as the travel rule. Today, we're going to have a look at what consequences this will have for crypto exchanges, currencies, investors, and businesses. Will it steer innovation or it will limit crypto technology? For this, we have knowledgeable experts in the field to help us navigate and bring more clarity on these topics. So today we have, from regulatory perspective, Samantha Pelosi. Hi, Samantha.
Good morning.
Please tell us a bit about yourself and what you do.
I've been in the AML space and sanctions compliance space since the beginning of my career. I'm an attorney, chief compliance officer, and policy expert in the area. I'm based in the United States. I joined FinCEN, which is the AML regulator, right after 9/11 to implement the Patriot Act. I've also been at the Federal Reserve Board in the consumer protection area as well as payments, and that's where I started following cryptocurrencies. So kind of at the beginning, very fortunate because I wouldn't have been able to kind of retroactively learn about crypto, but since I was in on the ground floor, I was able to follow all of the developments, including application of the travel rules. So I'm excited to be here with you all today.
Yeah, where to? Thank you for that. So from implementation end, we have Malcolm Wright.
Thank you very much, and it's great to be here. We've got such a great audience. I was such a great set of speakers as well, so really good to be here. Malcolm Wright. I started life as a developer, ended life where we got to today in regulation, policy, and compliance. It was a strange journey, but it's helped along the way to actually be able to understand the technology behind a lot of what we're doing in terms of crypto development. I started out on the travel rule journey in particular, actually in 2019, when just ahead of the FATF actually releasing the guidelines, and have been representing the industry since then on what good would look like. So what does it look like from an implementation perspective? What are the tools out there that help that? Creating some of the standards or co-leading some of the standards that were created, such as the IVMS message format that is now used by most of the tools, and really acting on behalf of the industry as that bridge between the regulatory community on one side and the FATF on one side and the industry on the others to try and find that balance as to what good will then look like and how do we do this in an efficient and an effective way.
Mm-hmm. Great, thank you very much. So from the banks, clients, and VASPs, which is virtual asset service providers, for those who don't know, we have representative Maha Al-Sadi. Hi, Maha.
Hello. Hi, thank you so much for having me. Maha Sadi. I started my career as a regulator at Qatar Financial Sector Regulatory Authority, where I was responsible for the authorization of financial institutions. And that was my first interaction with FATF standards when me and FATF had some observations on the implementation of FATF recommendations in Doha. I then moved to Germany, where I got my master's degree in finance law, and I wrote my master's degree in the implementation of the 4th Anti-Money Laundering Directive in Europe at the time. Worked for years as an anti-money laundering consultant. Frankly speaking, it was great, but way too specific for me, so I decided to go to the financial market infrastructure side, where I joined Deutsche Börse for around 9 years. There, AML was a topic, but it was not as severe as it is for me right now, working for Bank Hausreich, a private German bank that is specialized in market making and OTC trading for digital assets and cryptocurrencies. And this is where travel rule has become more apparent in terms of implementation. And as of the next couple of weeks, I would be looking at it from a different perspective as I move to the Middle East to work for a regulator, and also look into the implementation of FATF recommendations, including the travel rule. So thank you so much for having me.
Yeah, thank you for coming and for the introduction. So last but not least, we have from a solution provider, and we have Harm Arts. Hi, Harm.
Hello, thanks for having me. I'm genuinely excited to be here. There is such great company here. So I'm an engineer first and foremost. I'm currently working at 21 Analytics. I co-founded this company. We co-founded this company because we saw the travel rule recommendation from the FATF back in 2019, as Malcolm told you. And this recommendation looked deceptively simple. But from my experience as an engineer, I was like, okay, this is going to be tricky. Let's get involved. We want cryptocurrencies to be accepted by everybody. That means also the regulator, and the regulator has they're a bit scared of crypto sometimes. So we were in the correct position at that time to explain this. We talk to regulators often, and we guide all these solutions to a right path. So there are many different solutions. I worked with Malcolm in the past on some of these things, and to make sure that these travel rule solutions come out nicely, that they preserve privacy, that they work quickly, and that they are sane from a technical perspective. So usually I'm from technical perspective. At 21 Analytics currently, I'm talking to clients more often than not, and I'm guiding our products.
Yeah, that's great. Definitely something we would need for this webinar. So let's start with our first questions then. And first we will have some kind of like more introductory, explanatory questions. So Samantha, what is, in your opinion, let's say, travel rule and how it will help combat illicit activities? And also, what are the current global standards and statuses on compliance regulation?
Thanks for that question. Yeah, I think it's important to kind of set the table for our discussion. So as several of the other speakers have already mentioned, the travel rule as applied to crypto started to bubble up and become an issue on the international stage at the end of 2019 and really kind of came to the forefront in 2020. There are a couple of things to keep in mind with regard to the FATF standards. The FATF is actually delegations from all different parts of a national government to a body called FATF. There is no actual FATF building. There is a secretariat, but it's not like the UN. You just appear there. And it's law enforcement, it's regulators and financial services, tax authorities, all kinds of different representation. And your nation shows up there with all of these experts and tackles various issues that come up. So it's not a regulatory body in itself. It has no actual authority on, say, financial services institutions. It does have moral pressure to put on the governments, though, however, that are members of the FATF. So the travel rule in the United States was on the books in our regulations and laws since 1996, and it, of course, there was no crypto back then, so it, of course, applied to all regular kind of financial institutions and was most difficult for money transmitters to comply with. The banks had fewer nested accounts that they had to worry about, and so they were able to transfer the information that from their clients to the beneficiary or vice versa. And the reason behind the travel rule was, unlike cryptocurrency, it was difficult to see where funds were coming from and where they were ending up. So the information for the entire path, the chain that they went through to get to their final destination, was recorded in the actual transaction and flowed with the transaction. And that's how we came to have the travel rule. It's interesting because one of my friends, when I was at the Fed, had just gone to a crypto exchange and called me up in, I would say, that was even earlier. It was like 2013, and said, Samantha, you know about, all of the regulations in the United States on AML. Do you think, does the travel rule apply to crypto, Bitcoin specifically? And I was like, yep, it probably does. And she's like, how would you ever comply with that? Because it's not like you can put information into the blockchain to travel with the transaction, because the transaction doesn't really go anywhere. It's just recorded. Your property rights in the crypto is just recorded on the blockchain on a computer. And I was like, that's why I'm not in a crypto company right now, and I have no idea how that would actually occur, because you don't just append information to a transfer of crypto. And also the crypto, especially Bitcoin, was kind of pseudonymous, and you didn't need to necessarily do KYC on your customers if you were a crypto exchange. So you didn't even necessarily collect the information that needed to be transferred with the rule. So when the FATF started looking at this issue, it became, a real focus of the industry, because it was going to take a technology solution to assist with compliance. There was no way to just comply with your everyday kind of technology on your laptop like banks do. It was going to take a technology solution to actually accomplish this. Almost instantly, there became issues about the self-hosted wallets that are not at an exchange. What do you do with those? And also the question, and I think we'll come to this later, is, in my mind at least, do you really even need the travel rule for crypto, since you can see on the blockchain, tracing the blockchain, where the crypto came from, what wallet it came from, and then where it ended. And it's a straight line. There aren't really necessarily hops in between, because it's a peer-to-peer transaction at the end of the day. So I'll leave us there. But since the FATF instituted the recommendation, different governments have taken different approaches to crypto and require different information at different thresholds. And some have discussed what to do with the self-hosted wallets, and others have not. So there's a real mismatch in timing and in substance between national crypto regulations and laws.
Mm-hmm. Thank you for your extensive answers, and we will get to hosted wallets a bit later as well. This would be also one of the questions. But Malcolm, maybe you can also shed some light. What are the main challenges in effective travel rule implementation at the moment?
Sure. I think actually it's also worth taking a step back and just saying, why are we doing it? What's the point? And the real answer to that lies in what the FATF was set up to initially to prevent. It's things like human trafficking. It's things like drugs and illicit drugs. It's things like all of those kinds of activities like nuclear proliferation, that the transfer and flow of value from A to B that may be illicit, that may have things that are damaging to our society, they're damaging to human lives. And this is really why FATF was set up, initially looking at illicit drugs and organized crime and so forth. So it was born out of that. It's really to make the world a safer place by being able to do that. Now, at the very, very first FATF meeting with the industry, that was a public sector consultative forum in May 2019, I asked the US delegation actually, why it's actually necessary. Why do we have to do this in terms of, we can see that it's going from point A to point B, so can't we just ask the relevant exchanges on both ends? And the view was, well, no, actually, we need to be able to go, law enforcement will want to be able to go to one point of contact and be able to get all of the information about a transaction. So that's from both sides of the transaction. And that was really key to the discussion that, okay, if you're in, for example, here I'm in UAE, the FIU in the UAE will go to a local VASP that's regulated and be able to pull all of the information for both ends of that transaction to fully understand without having to do cross-border mutual agreements and so forth with other law enforcement agencies, because the longer it takes to actually investigate, the further the funds will go before they can potentially be frozen or seized or anything like that. So it's very important to be able to act quickly, and the quickest way to do that is to say, okay, we've got this in place. The challenges, and Samantha kind of highlighted some of them. The first one actually is who is the counterparty VASP? That's actually quite a difficult one, because when you look at your IBAN, for example, you have the bank, you have the country, you have the branch, you have the account number. It's all there in the string of letters and numbers that you have. When you have a crypto address, it's just random letters and numbers. You have nothing that gives you any geographical reference, any reference to the organization. So from there, the first part is, how do I work out who the counterparty is? And not just to a global level, which is, okay, it's a global VASP of this name, for example, but actually which jurisdiction is it in? Because it's really important to say, oh, it's based in Singapore, it's based in the UK, so that you can then work out what's the threshold. And the threshold is the amount, the value of the transfer over which you then have to be able to make, you can then make the travel rule data transfer. If it's below a threshold, then the transfer of information is not necessary, but if it's over the threshold, it would be. And the originator and the beneficiary VASP in different countries may have different thresholds. So it's again one of those challenges, though. If it's 1,500 Sing in Singapore and it's 3,500 dirham in the UAE, how do you work out that threshold exists, but also finding that normalization between the two so that both VASPs know what they have to do, because both ends of the transaction, they will have to apply travel rule. So actually getting that information correct is important. The other side of that is also data privacy. So for example, knowing that you are sending it to the correct entity of a global VASP, for example, in a given location will have an effect as the originator VASP, who remains liable for the transfer of the travel rule data. So they have a due diligence to actually make sure that they're sending it to the right location. Then we start to look at some of the other intricacies, one of which is name screening of the counterparty. So as the originator VASP, you have to screen the beneficiary name. As the beneficiary VASP, you have to screen the originator name, making sure that you're doing this, and not just wallet screening, but actually name screening. And this has been a challenge in traditional banking. It will remain so, I think, in this case here. Being able to do that name screening and get sufficient information. Now, in the traditional finance world, we have requests for information. So if you don't have enough information to be able to remediate all of your results, you can go to the counterparty and say, hey, can you give me a little bit more information, because I need it to be able to close out the case and be able to make the transfer. So that kind of process will also be required. There's some maturity points and some things that actually at the moment we're still, I think Harm said at the very, very beginning, it's going to be more complicated than it looks. And when you start to dig into the detail, it becomes more complicated. But I think the highest point, or the starting point of the challenge is actually more around the discovery of the counterparty. I'll let Harm talk to interoperability a bit later between different solutions, but one of the other problems we have right now is the fragmentation of the industry. So we have like 7, 8 different travel rule solutions that can help with the transfer of information from A to B. Each has their own protocol, each has their own network as to how people can join their network. but it's very difficult to actually create those interoperable bridges between those different protocols. So underneath we need discovery, above it we need protocols, but we'll talk about the solutions in a bit.
Yeah, thank you for that. So we can see that there is actually a lot of problem between different, let's say, legislations, threshold, and actually even due diligence difference between different, like, let's say, parties. But wouldn't, let's say, law different jurisdictions and, I mean, FATFs themselves and more regulatory bodies kind of harmonize between themselves in the future? How the whole travel rule implementation might change, and kind of what will be the evolution for it in the near future? Then maybe Samantha can shed a bit more light on this before we kind of dive into more VSP and solution-oriented discussion as well.
Sure. I definitely want to get Maha and involved in our conversation as well. And she'll have some perspective from, of course, the financial institution kind of point of view on this. So one would think that you could harmonize the requirements at the FATF level, and then also have those trickle down on the national level by each nation. But the fact is that each nation has their own laws and their own sovereignty, and they want to do things their way. They also have their own kind of ecosystem in their financial system, and maybe dealing with different factors. So for instance, one of the things that we may address later on is, will smaller financial institutions, will smaller VASPs have difficulty implementing travel rule solutions because of less manpower, of less money, resources to throw at the problem? And I think the agreement is yes, they're just smaller. Where does that matter though? That matters really in the United States or wherever there are smaller banks and financial institution and VASPs. So for instance, in the United States, we have 6,000 financial institutions. Some of them are very small community banks and with one branch, and they have to comply with the same rules as the bigger guys, as Bank of America does. So that is a problem. But in Europe, because the US is always kind of comparing itself to the European financial ecosystem, in Europe, there are pretty much a consolidated number of banks. There's like 20 larger banks that exist in all of Europe, and much fewer of these small kind of community banks, except perhaps in Germany, that they definitely have more financial institutions in Germany. And it all, crypto is new, and there are all of these startups. So there's a lot of smaller players in the field. And that adds complexity as well. I think a couple of the ways that both the national governments could definitely get together and say, okay, these are going to be our common thresholds. This is going to be the information that needs to be sent and received, and line all of that up in legislation. That can be done through legislation if they wanted to. If they don't, then there's, again, going to need to be a technical solution to getting all of this information back and forth, and getting the right information back and forth, and making sure that all of the solutions, again, are interoperable, so that it doesn't matter if you're using solution A and trying to get information to a different institution that's using solution B, that A and B can talk to each other nevertheless. So I would say you have to have similar protocols so that systems can talk to each other, similar messaging types and fields, because this is something that the regular fiat bank system has struggled with forever, and they're finally rolling out a new standard for messaging, payment messaging, and that has enough fields to include all of this information. And if there's not a field to put the information into, that information is not going to transfer. So there are all these kind of technical nitty gritty problems with the travel rule and harmonizing it, but it can be done. For the compliance officers out there, 20 years ago, when I was the chief compliance officer of a money transmitter, we had to comply with the travel rule. And we were sending money all over the world and receiving money all over the world. What compliance officers do, and it's what VASPs can do as well, is you take the highest threshold and the highest amount of data that's required. So if 20 data points are required by one country, but everyone else requires 10, you send the 20 data points of information at the lowest threshold to everyone. But that's not a problem in fiat world, because the information is going through banking channels and end to end ends up in banks, where there are security and privacy laws that definitely attach those institutions. That's not necessarily. And because of the funds are so traceable by just the general public, because it's crypto, it can actually really put people's privacy and even physical security at risk if people know that you are essentially hiding your crypto under your mattress on a hard drive, on a Trezor drive. Then they can show up at your house and kidnap you. And this has actually happened, before, that criminal gangs have showed up at people's houses, kidnapped them, asked for the ransom on their drives. So it's a real privacy and even a physical security problem where crypto comes into play. And you really have to know your counterparty, VASP, and if they're trustworthy, that you're sending your client's information to an unknown VASP.
Yeah, I'd like to interject here just briefly, because I think you're right. The threshold is going to be irrelevant. The threshold is 0. Everybody's going to use 0. Everybody's going to collect everything because, as you said, Samantha, that's just the safest thing to do. I think where the crux lies exactly is that who your counterparty is. Do you trust your counterparty? Do you know what kind of counterparty you're sending your crypto to, and all this PII information? And I think that this is exactly where I think lots of focus is going to be laid down. Not all these thresholds, these in effect, for all these guys, all the compliance officers, the threshold is in effect 0, because the European Union did 0. Done. The European Union also did say that all your counterparties, if they're in the European jurisdiction, you can send this stuff, because then they are beholden to the GDPR, etc. I think this is a bit too easy. It depends also highly on your risk appetite. If I'm a small startup in Switzerland, then my risk appetite might be a little bit higher. But I would very strongly recommend that if you're sending this travel rule information, be cognizant of who you're sending that stuff to. There are all these different solutions out there. There are different ways of even these solutions. They have auditing requirements, for example. These vary from solution to solution, but in the end, you can't outsource compliance. You need to have, as a VASP, you need to have a good story to your regulator why you thought it was okay to send this very sensitive PII data to this counterparty. So this is what you need to be very careful of. And I think in the future we'll see much more stuff happening there. Like I think even service providers standing up and doing that. This is also tricky, of course, because then you're trusting the service provider. Do they have the same risk appetite as yours, et cetera, et cetera. But there needs to be some sort of bootstrapping going on there. Yeah, this is an evolving field, and with regard to the to all the information being sent, sadly, I believe everything is going to be sent, everything is going to be asked, and that's going to be sent. With regard to interoperability, I think actually, Ilmar, maybe I'm jumping the gun here. I personally don't believe in interoperability because these networks, they don't have an incentive, or these solutions, they don't really have incentives to do this. I'm very happy to know that the IVMS 101 standard, which Malcolm mentioned, that's at least a common data standard, which it's universally accepted, I think. That's great, but sending money from TRP, for example, to trust, that's never going to happen. You need to, as a fast, and that's also not that big of a deal, because you can very easily, or you can relatively easily support different protocols. You need to make an assessment on that stuff anyway. You need to know your counterparty, and then you need to figure out where or how to send your travel rule information to that counterparty. They might be on trust, they might be on TRP, they might be on something else. You're going to need to figure this out anyway. So there's not going to be interoperability, but you as a VASP are going to have you're going to support multiple protocols. And I think this is okay. This is not ideal, but this is okay. And I think actually it might be the better solution than just having Swift, for example, because now you have competition between these protocols, between these things. Your risk appetite might be a little bit higher, a little bit lower. You can pick and choose. For example, Trust has only a very limited subset of assets they support. Other solutions support all of them. Well, these are all vectors you can look at. But now I'm going to give the floor back to Ilmar because he has lots of more interesting questions.
No. Thank you very much for that. Actually, since also Harm mentioned that the safest thing would be just to keep threshold at 0, and basically that everybody eventually would send everything, this leads us actually to a question to Maha. How well are actually virtual asset service providers are equipped to implement travel rule currently? Where do they stand in the current legal environment? And also, do you think that a lot of, let's say, smaller virtual asset service providers will be kind of left out? Maybe they will lose a lot of money or even business because of this.
That's an excellent question. So when it comes, we'll start with how virtual asset service providers operate. Here we're looking at CASPs or VASPs. We have two different ones. Once that could be an established financial institution that is offering crypto asset services in addition, they're very well positioned to offer these services because they're more or less used to it from their traditional finance experience, and it's just a simple add-on that they will just enhance. To that, they have the expertise, the financial means to also engage with good service providers, in a sense, outsource some of the technical aspects, but you cannot really outsource the responsibility, as Harm initially mentioned. Whenever we're reading regulations, especially the transfer for fund regulation, there is always the claim that it should be proportionate and it should be technology neutral. But unfortunately, when it comes to real-life implementation, smaller crypto asset service providers and VASPs are not able to meet the high burden of compliance costs. So some of them would either be bought out or would not be able to comply and will be named and shamed in the end for not being able to comply, which is slightly unfortunate, but it is the cost of doing business, so to say. Additionally, looking into the transfer for fund regulation from a European perspective, I would like to add that we need to see that what we're providing and all the information that we're required to collect from the payer and payee point of view is somehow also captured in some of the onboarding and KYC requirements if you're dealing with specialized entities. So you would still have to collect the name and the date of birth and the LEI and the UTI. So it's a bit repetitive in a sense. So how could we optimize that data? because at the end of the day, the business has to be profitable. The other flip of the coin, which I struggle with, is once we submit certain suspicious transactions or activity reports to the FIU based on insufficient information or a suspicion of something going wrong, we are not sure, and this is not meant as a criticism, if it's received and what happens afterwards. So we try to be extra compliant. We submit all the information, we freeze certain transactions when it's required, but then we don't know where that goes. So is it really working? Is that the end effect that we're trying to achieve? One other aspect is that we should not forget that when it comes to crypto, it's still evolving. It is still, in a sense, in its intimacy, and its very beginning. So I'm not quite sure how that would evolve and if it would require additional changes as we go. Looking into the transfer for fund regulation from a European perspective, I think that it will also have another round of revision in 2026. So this would be very interesting to see what would come in. I think ransoms and NFTs will be another area that would require a lot of involvement, but there's a lot of unknowns. So how quick could your business adapt to these uncertainties, and how could you ensure ongoing compliance remains to be seen?
Okay, thank you very much for that. So I think next question will be kind of, it's kind of a big elephant in the room and maybe a bit misunderstood among those who have cryptocurrencies. So maybe Harm could shed a bit light on that. So am I true? Is it true that basically travel rule only applies to, let's say, crypto exchanges or VSPs? But if, let's say, I'm just sending some crypto on my phone to, let's say, my friend's phone or something similar, like I think it's called hosted wallets.
Yes.
It doesn't, like, travel rule wouldn't apply to that. And then the next question, if yes, then wouldn't make this kind of like a big loophole and a potential money laundering, let's say, hotbed in a way?
So the answer to the first question is yes. So if you do a self-hosted to self-hosted transfer, you are not beholden to travel rule. I mean, this is just me, Harm, sending you Ilmar coins. That's it. It's just peer-to-peer. It's just exchanging cash. There's no the FIU can't come knocking on my door and say, hey, with whom did you do business? The second question is whether or not this would be a loophole. Yes, in a sense, this would be a loophole because I could, if I don't want my information being exchanged between two VASPs, I hop to my own wallet, I hop to another wallet, hop to another wallet, hop to the final destination. But as been pointed out previously during this call, this is all pretty evident. This is on a public ledger. You don't get too much out of that. You can go all the way with mixers, tumblers, and whatnot, sure. But the goal of the travel rule is to have this FIU, and they can follow this trail, and they can still follow this trail if you do this. Now, you touched on this self-hosted wallet wallet issue. Sometimes that's part of travel rule, sometimes it's not part of travel rule. In TFR, it's clearly part of travel rule, and I think it should be part of it. Why is that? Because if a user, and this is where Malcolm touched on previously, if a user knocks on your door on your exchange and says, hey, I want to withdraw coins to this particular wallet, this is a self-hosted wallet. And then you as an exchange say, okay, self-hosted wallet, so I don't need to collect all this information. I'm going to send the coins there because I know who you are and this is all fine. Consider the possibility that the user made a mistake or actively lied to you, and this wasn't a Bitcoin address which belonged to a self-hosted wallet, but this was actually an address which belonged to Kraken, for example, or Binance, whatever. Now you as an exchange, as a VASP or as a CASP, you are wiring money, you're sending coins from your exchange to another exchange without travel rule information. And then you're in breach of travel rule. This will get you in trouble. So if a user comes around and says, hey, can you send my coins to this particular address? You need to figure out, you need to have proof that this is actually a self-hosted wallet. There are ways of doing this. There are actually 4 ways of doing this, all with their own upsides and downsides. But this is an integral part of travel rule compliance. You need to do this. Some protocols make this a little bit easier. Malcolm again alluded to this. This is the VASP discovery problem. Different protocols tackle this in a different way. For example, I think I used Trust previously. Trust will have a centralized bulletin board, and there you just toss this address to, and then you wait till somebody raises their hands and says, "Yes, this is my address." You need to wait. What if the owner of that address is down? It's a bit clunky. I think in practice it's going to be relatively quick. But what if the VASP is not on the Trust network? Then you need to go to the other network and do the same thing again. Verify VASP as something similar, for example. TRP solves this in a different way. I was really biting my tongue when Malcolm mentioned the IBAN there, because TRP actually sort of invented an IBAN for crypto transfers. They call it the travel address instead of a Bitcoin address or an Ether address. It's travel address. This is just an opaque string of characters, and that's where this thing is encoded. So my point being is that if you have a travel address, you immediately know it belongs to this particular VASP and not to a self-hosted or unhosted wallet. So the loophole, to circle back, the loophole you mentioned, it theoretically exists, but I think we're getting at a point where on-chain analytics firms are getting, this is pretty simple. You don't even need an on-chain analytics firm, right? You just need an intern to walk through this thing. It's pretty simple. And you already have an FIU knocking and pulling this thread. So it's I don't see this as an issue. But you do need to have proof that you're sending coins to a self-hosted address. Otherwise, you might be in breach of compliance.
Yeah, worth just adding there, I think that at some point as well, you've either off-ramped from an exchange into a self-hosted wallet, or you're going to go the other way. So you're going to make some transaction eventually if you've got your hosted wallet. And maybe you'll buy real world assets, maybe you'll go straight back to an exchange, but it's going to have some touch point back into a KYC.
Right. Yeah.
Wallet or a KYC source. So at that point, again, it will get picked up, and then the tracing applies and everything else.
Yeah. What this thing does, what this travel rule does, it will expand a little bit the knowledge of the FIU eventually. And that's the goal. That there are still edges. DeFi, for example, a question I get asked all the time. Yeah, that's just not part of this. That's not. It's a hard problem. It's a tough nut to crack. But I think there are other angles there.
But also because it's kind of like in a way, travel rule is at one hand a privacy issue, and there is kind of like no one else who wants more privacy, let's say, than large worth investors in a way. So Harm, what do you think? Will maybe cryptocurrency still trying to save this kind of a privacy thing by cutting edge technology? Because in a way, the whole crypto technology has many ways it could like evolve. Do you think there will be some alternative, let's say maybe roads or something? I'm not an engineer, so I will give you the stage.
This is a very good question. I think you mentioned innovations in crypto and large investors. I think these two mesh poorly. It's my experience talking to prospects and clients that if you are a large investor, you are going to over comply. So they are banking with an institutional who has a long history. They comply with all this stuff, no worries. If you talk about innovations in crypto, like a Mimblewimble protocol or a zero knowledge proof or any of that, frankly, I'm not too worried about that because this is used for small timers. And as Malcolm pointed out, you still have the on ramp and off ramp. if, and this is a big if fiat becomes far less relevant in the future, where you see that most of the money flows become peer-to-peer, maybe you have an issue then. But I think that law enforcement will keep finding new ways of tracking this. And I think this the likelihood of this happening is, well, it's definitely not guaranteed. And talking about law enforcement, frankly, I think this is an underutilized source. I would prefer to see detectives with trench coats and fedoras chasing the criminals. That is what I'm missing in this discussion, is that we are now spreading PII data far and wide, and maybe take a step back. I think don't discard these detectives out of hand, and I think maybe that's where we're going to in the future. It's all publicly recorded. There is so much data you can gather without having this travel stuff. So I'm not worried about privacy coins or any of that. In fact, I think it was in Mika where privacy coins are explicitly banned from exchanges. I don't think this is a good development, but this is something, well, I am at least going to cope with.
Okay, we can expand a bit even further on that in a way from a WASP's perspective. So let's say because of the travel rule, in a way, cryptocurrency will be more integrated in a financial systems. So Maha, how do you think travel rule would affect the view on cryptocurrency? Will it actually attract more investors to it because it's more kind of official now? What just do you think about future of the crypto prices and the whole technology because of the travel rule?
Frankly speaking, and this could be an unpopular opinion, I don't think that the travel rule would be the reason why investors would be going into dealing with crypto assets. I think what we have in Europe is, for example, MiCA. It is the regulatory clarity that comes with the crypto asset service providers being authorized, having sufficient prudential requirements, etc. But I do not think that the travel rule by itself would be the success ingredient that we're looking for mass adoption. That said, it's of course something that the regulators would like to have as a comfort, knowing that all the information that they would require for investigation and enforcement is available. I see that currently bigger institutions are looking into getting into the crypto asset space because we have additional regulatory clarity. We can see that, for example, in the United Arab Emirates with BARA. We could see that increasingly in Europe with MiCA, where you have big names, for example, DWS, Deutsche Bank, and the likes in Europe that are already registered interest in the custody service and the paying in service. This is where complying with the travel rule would be super necessary. But if you're looking at it from an infrastructure provider point of view, or what my previous employer, Bankhouse Scheidt, used to do, it is not directly applicable because we're doing it on OTC trading. But we need to make sure that each and every one of our counterparts are aware of the requirements that they have to comply, and we have to check that they are aware of how the travel rule works and that they're capturing the right data so it does not fall back on us. So generally speaking, travel rule is good to have, but it's not the go-to for mass adoption, unfortunately.
If I could just hop in, because I want to give Maha support, I don't think that that's an unpopular opinion. Travel rule is not the dog, it's rather the tail. And all of the AML laws expect you to do due diligence on your customer, identify your customer, and then do due diligence to make sure they're not a criminal or a party that's on a sanctioned list, for you to continue to open up business, start doing business with that customer. So you're then supposed to hold on to the information that you learn and continue to monitor it and see if anything changes, if you see any changes or suspicious patterns of activity while you're doing business with your customer. That is the core of anti-money laundering rules and regulations and laws. And the travel rule just requires that you send essentially the basic identifying information from point A to point B. So that both ends of the transaction have that information if law enforcement comes calling. And it's not really where the crux is doing that KYC, doing that due diligence and identification on your customer when they come in the door, and then continuing to monitor what happens with that customer to make sure they weren't misrepresenting themselves in the first place when they appeared at your door. So I wholeheartedly agree with Maha that the travel rule is just a really small part of the whole AML ecosystem, and perhaps the whole AML ecosystem isn't really the most important part of the entire ecosystem for these big institutional investors. It's securities laws, it's other laws that they're really focused on.
Mm-hmm. Yeah, thank you for that input. So, Malcolm, how do consultancy outsourcing firms view the overlap of know your customer KYC processes with the travel rule requirements?
So I think that there's an opportunity here because you can't outsource the risk, but you can certainly outsource the functional operation to actually do the work in the first place. So there's going to be areas of opportunity. There's areas of opportunity for development, for integration of travel rule solutions. I'm completely with Harm. I think that there will be you'd have to implement multiple travel rule solutions. That may require a pricing change from some of the solutions so that it's actually on a more transactional basis. That makes it then fairer for the small guys as well as the large guys. But I think that there will then be opportunities, particularly around ensuring the information is collected correctly, screening resolution. So firms that can provide, for example, outsourced staff to manage the load for screening resolution. And by this, I mean name screening, not just wallet screening. This is the part that tends to get missed. It's I've got to screen Harmart's name. I'm sorry, I'm picking on you there, Harm. I have to screen Harmart's name because he's the beneficiary and I'm the originator of ASP. But maybe I don't have enough information. Maybe I actually need to get some further information to know which country he's living in and residency and so forth. So then we have to do a request out to the beneficiary of ASP. So that part of the process itself could be outsourced. The risk remains with the VASP itself. So there are opportunities there to really help support firms on that journey, both with technical implementation, development implementation, and then the support for the actual operation and function on a day-to-day basis. There is room for this for sure.
Yeah, thank you for that. We're gonna go back to VSPs again. What do you think is the kind of like main challenge in your business for the nearest future because of the travel rule?
Monitoring.
Sorry?
I think monitoring, that was something that was touched upon before. I think monitoring and ensuring ongoing compliance is the issue. You can have excellent policies and procedures. You can draft the best guidelines on how to implement it, but the implementation, the ongoing monitoring, and keeping up to date with regulatory changes that you would have within your jurisdiction and within other jurisdictions, because crypto is a global topic, this is the biggest burden that I see that VASP will be faced with. In addition, one of the things that were also mentioned earlier is the treatment of privacy coins. This is one of the biggest points. How do we define privacy coin? How do we identify unhosted or anonymous wallets, the definition of privacy coins, we know the big ones, we know Monero, we know some of them, but how do we have a proper mechanism to identify privacy coins? And to this note, I would also say that it's kind of unfortunate that we have to exclude such coins, because numerous researchers, including some from the US government, Chainalysis, and other providers, just to name it on the top of my head, even the BIS admitted that the majority of the illicit transactions happens in fiat and traditional finance and not in crypto. So if we value our privacy as European citizens or others, we should not just go and completely ban these coins because I think it's unjustified. But as long as we have these exemptions in MiCA and the transfer of fund regulation, we need to find a proper way to identify them and to ensure that we have ongoing compliance and monitoring and keep our eyes broader, not only within our jurisdictions, but into other jurisdictions, because crypto is a global topic and not a very local one.
Okay, thank you for that. So maybe Samantha has a bit points on top of that. How could maybe legislation help VSPs to better monitor? Maybe there will be some, how to say, moving forward for the comfort of VSPs in a way.
Yeah, I think that, and I know Malcolm feels strongly on this point as well, that the travel rule provides information to both VASPs on both ends, the counterparty and the originating VASP, with some valuable information about not only who their own client is dealing with, but the transactions themselves. It really provides additional information for doing basic money laundering checks and monitoring. And I think those institutions that recognize this have a strong competitive advantage of protecting their own institutions and their own clients from fraud, from theft, from regulatory fines, because it's my strong opinion that the travel rule was implemented for fiat because cross-border international transfers go on many different 2-point hops to get to their final destination. So it'll go from bank A to B, from bank B to C, from bank C to D, and then D to E to finally get to E where the customer of bank A wanted it to go, because it doesn't go directly with fiat. So instead of following that whole ridiculous chain, each endpoint has all the information about where it originated and where it went. Once you have that information, and that's just so you can trace, who sent the funds and who received the funds. And that's what law enforcement wants. The regulators, however, once you get a hold of any information, they do expect you to do something with it. You can't just collect information and let it sit there and pretend that you didn't see something. So you use that information for your sanctions screening. You use it for your transaction monitoring. Now suddenly is this client of yours that is in one low risk industry now dealing with counterparties that are in incredibly high risk industries? Are they dealing with criminals on the other side, etc.? And it can really help you mitigate your own internal risks, as well as, risks to the entire payment system and the entire financial system globally. So it's really a competitive advantage to keep your own nose clean, and also to protect your financial institution, because once the fraudsters get in, you're not immune to actually being exploited yourself if you let that fraudster into your own financial institution. So I think a lot can be done with this information, and regulators, they come to expect it from, the fiat providers. They're going to expect it also from the VASPs.
Thank you for that. So since we already got an opinion from a VAS VASPs about the future kind of issues. So Harm, what is the leading challenge for solution providers regarding the crypto travel rule? And also additionally, what are the shortcomings of the existing solutions at the moment?
Oh, good question. Okay, so the short, if you would take one thing away from this meeting, that would be that as a VASP, sit down, look at all the transactions you've done in the past, and figure out who your counterparties are. This is a fundamental first step you can do in an afternoon. Give this list to your tech guys, run it through TRM Labs or something else. Then you get going. The second thing I advise everybody to do, and in all my talks I give the same thing with prospects. Set up an email address. Set up an email address, travelrule@myvasp.com. Make sure that your business can continue to do business even if you're in this under these laws. This is very simple. You can do this. This is not perfect at all because now you have a pile of emails which you need to sort through, and if an FIU comes knocking, you need to do something with it. But this gets the show going. So on the second part, what can solutions do better, protocols do better, consortia do better? So, I think what they can do better is better educate people, because there is a lot of unclarity around what you need to do. Frankly, I think that most of the solutions have crystallized to some form where they're not going to change too much. You see the rate of change slowing. That's a good thing. That means people thought about this. If you look for us, for example, we're very closely working with the TRP, one of the protocols. That was very quickly in the beginning, and now you see only small changes, small additions there. That's great. Same goes with Trust, for example. You saw in the very beginning there was a lot of change. Then there was a lot of legal S and whatnot going on, and stuff settled down a little bit. So from a solutions perspective, I think I'm quite optimistic. Actually, we're almost there. But it is on the VASP side where they need to start doing something. We haven't touched on the sunrise issue, where you as a VASP want to comply and the other side doesn't have a solution in place. That's why I said use this email, get something going. This is okay. These kind of things, as a VASP, you need to start thinking about this. And it's actually pretty simple. Start figuring out who your counterparties are. Start with setting up this email, or and make sure that people can find you on that email. Make a microsite on your VASP website for compliance people coming there. We, for example, have if compliance people from another VASP, from another originator, and you're the beneficiary, you can have a microsite where these guys fill out the information, so you don't need to deal with this. It's all pretty simple, but you need to get going because it's relatively simple, but it is a lot. And if you want to do this, you are going to have a competitive advantage, because Binance, I hope somebody in the crowd is from Binance here. That's going to be fun. So if you're Binance and you don't want to comply with this with travel rule, you are going to need to quarantine these coins and send them back. This is just the law. And get the stuff going. This is going to hurt your business if you don't start. And it's simple to start. It's a lot, but it's simple.
It's very disruptive to have to send the coins back.
Yes.
It's a disaster for
Yes.
any kind of financial institution, including a VASP. The UK and Europe kind of just recently put in their fiat funds transfer rule, quite frankly, in like 2006 17 maybe. I do have it wrong. So the fiat funds transfer rule, which says you've got to collect this information and send the information, right? All of the banks can send the information because it's on their customer. But if something comes in and doesn't have the information from a different country where there's no travel rule required, right? So they don't have to send that information under their own laws. So it shows up blank in the UK. And they then call back and say, hey, can we have this information? There's no requirement to send the information in the originating country. And in fact, they may be prohibited from sharing PII in a country outside the country. And so you never hear back. Those funds sit there. Then there's a question of how long should they sit there? How long should we wait? What do we do with them? Do we have to pay interest on them? When do we send them back? How do we send them back? And with crypto, it comes. It's not like it's captured and it's held. It is in the wallet if it goes directly. There's a lot of now these kind of pools that big VASPs have where it doesn't go directly into the wallet. It goes into this holding pool before being applied. But theoretically, it can go directly to the beneficiary, and then it's with the beneficiary.
You can't do that anymore.
Yeah. So what do you do then? You're never going to get that information, and it's already in the hands of the beneficiary. And it's incredibly time consuming and wasteful and inefficient to be trying to send funds back.
Yeah, and this is actually to quickly wrap up. There, I talked about protocols like Trust, TRP, all these guys. What you see quickly there is that this sending back of funds, that was exactly what someone said, incredibly painful. And what all these protocols do, they ask permission. So the originator will say, I'm going to send you coins with this information. Is that okay? And then they're going to say yes or no. So you don't need to quarantine coins. The protocols out there have huge upsides over email. Use it. Get going with that.
So I think very, very quickly, there's just a couple of things. The FATF in their paper in June of this year was looking at an update specifically, to a targeted update specifically for travel rule. That's available on the FATF website. Did actually talk about the things that a VASP needs to look at in terms of compliance with, or when selecting a solution that is or is not FATF compliant. And generally, FATF provides recommendations for countries to then implement into law, for the VASPs to then comply with. So it's like a roll down that you get from the top that we need to then, as VASPs, then need to follow. At the V20 last year, which was a come together of the industry on the sidelines of the G20, we discussed one of the core challenges which still remains, and that we've talked about it already, which is VASP discovery. How do you know who is the counterparty VASP to an entity level? So actually entity and jurisdiction. How do I know that it's this legal entity in this jurisdiction before I start sending my customer information to the counterparty? And one of the things we discussed was the concept of a unified discovery as a base layer. Every VASP everywhere uses the same core technology to discover who is the counterparty VASP before any information is shared. And at that point, you then have the ability to know where the VASP is and who the VASP is. So are they on my list of VASPs I'm comfortable sharing information with? And do they meet my country risk thresholds? So am I comfortable doing business with a VASP that's located in a different jurisdiction, whatever that jurisdiction is? Then sitting above that, you then have, okay, and that VASP supports protocol A, B, and C, and I support protocols C, D, and E. That means I'm going to share using protocol C. So going back to Ham's earlier point, it makes sense to then implement multiple protocols because it gives you the greatest flex in terms of understanding who you can then do business with and to be able to comply with the travel rule. So that kind of model, single unified discovery, and again, it's coming together as to work out what that looks like. I was working with a firm last year who produced that discovery layer to be able to do that. Now, the ability to be able to say, okay, we have that discovery layer, and then have the protocols on top of it, allows you to stack your way through in terms of risk, and means that you're not exposing your customer data to the wrong jurisdiction or anything else. One of the problems of asking your customer as the originator of VASP, hey, can you tell me where I should send this information, is that even if the customer tells you the wrong thing, you as the VASP can still be liable under various data protection laws. So it really pays to work out, okay, how do we do this? How do we make sure that this is the correct way to move into this and to send the information to the correct location? And that will be the way that we then come together. Now, eventually we may see, rather than there being 8 protocols, there might be 3 or something like that. And over time, but that could be sort of a 5-6 year timeline. At the moment, we have to focus in. We have to say, okay, we've got this narrow timeline until next year, really, to actually start to implement, because the FATF is really pushing hard now to see countries implement travel rule, not just from a technical perspective, which is I've got the laws, but an effectiveness perspective, which is I'm implementing it and I'm taking effective action against the VASPs who are not compliant. So we will start to see movement on that in the next year. And so we've got to work out, how do we as an industry get from where we are today, which is lots of fragmented solutions, into actually something that's seamless. And that means coming together from different technology stacks. It means coming together for consultants. It means coming together with banks and regulators. To figure this out on a rapid timeline now.
Thank you very much. That was actually really insightful. So my next question, and we're going to slowly wrap it up because we are kind of getting out of time. But because of this, because of the protocols that are developing, kind of in a way fast, but in a way slowly. So my question is to Maha, do you think financial institutions would need support from government, and what support would they need to implement travel rule, where kind of solutions are at the early stage at the moment, as also Malcolm kind of outlined in a way?
I think when it comes to governments, what you expect from governments is having an open dialogue, having the ability to talk to your government or your regulator about your pain points, about the issues that you're facing in terms of the implementation, asking for grace periods grace periods in case you need more time to comply. But I think the government will basically just take its principle base and figure your way around implementing it, in a sense. What could also be beneficial is looking into the way that outsourcing requirements work. We have very difficult outsourcing requirements that became extra complicated with DARA, the Digital Operation Resilience Act in Europe. Yes, I am aware that once we outsource certain services to an analytics service provider or an AML provider, the responsibility doesn't go away from us, and we'll always be responsible for the outcome. But it's not necessarily the key area of expertise that a lot of startups or even traditional financial institutions would have. So it could make more sense to make outsourcing a bit more attainable and work with the governments to address the pain points early enough before these pain points turn into findings and penalties. So this is my quick take on the matter.
Yeah, thank you for that. Maybe Samantha or Malcolm can also add something on that.
You go ahead, Malcolm.
No, I was going to say, I don't think we're going to see harmonization of regulations, going back to an earlier point, I think what we said earlier, and harmonization of thresholds. So again, going back to unified discovery, if you have the threshold in at both parties, you can work it out. But from a regulatory perspective, I think there needs to be far greater depth of guidance for the industry. And that can be harmonized at whether it's a regional or a global level. That guidance can still remain technology neutral in terms of not supporting one particular solution or another, but go to a much deeper level of understanding and information about not only what is required, but also how that would then be implemented in terms of, okay, you need this kind of approach to succeed. At the moment, there's some fairly lightweight guidance in terms of, yes, you need to apply the travel rule, or and you need to screen customers and things like that. But getting to that next level of actually understanding not only timelines, but exactly what is required, being able to have a joined up solution, even having, for example, jurisdictional level solutions. So saying, okay, for this jurisdiction, we're going to approach it in this way, trying to do it on a regional level, trying to do it on a global level, but starting somewhere that says, okay, from a domestic perspective, we're expecting you guys to all figure it out and come together with a solution that can then scale internationally, but provide more guidance to the industry on the expectations as to how that will then unfold in terms of the approach that should be taken.
I completely agree with what's already been said. I think it's really an educational aspect, and a lot of the VASPs, as we've said before, are smaller. There are also huge VASPs, but all of them are kind of new to financial services, new being last 10 years. Other financial services have been around since the de Medicis, so several hundred years, and we keep hearing from some, which may be just kind of a smokescreen, but we keep hearing even from big guys that, they didn't know there was this obvious requirement placed upon them by law that was passed in their nation years and years ago, and therefore they weren't complying with it. I think that education of the laws, how they do apply practically, and within the through the regulations, I think that dialogue and that kind of outreach to industry is going to be really important on the regulator side, because if they want compliance so that essentially criminals can be tracked down and money laundering can be stopped, well, then they have to work with those really partners in getting this information and helping with that law enforcement effort and educating folks and letting them get started instead of just kind of tossing them into the fire and hoping that they'll figure it out themselves, because quite frankly, they won't, and it won't be helpful to law enforcement. So that's my last few thoughts.
Mm-hmm. Yeah, thank you for that. So I think if we could wrap up like the key points of what was said on this webinar, I think it was a great discussion. We managed to pinpoint that the main problems would be different thresholds and different legislations, proper different kind of levels of due diligence in a way between VASPs, and also data that needs to be kind of sent differs. And because of it, the safest thing we pointed out would be to have a threshold, let's say, of 0, and that everybody would send everybody everything. We also mentioned that smaller VASPs are indeed might be left out or capable of completely going out of business. We also noted that there is a lot of pressure on VASPs to be kind of gatekeepers, and there is definitely a lack of dialogue, and there is a need for far greater guidance and information outlined from the regulators. And there is also this kind of ongoing privacy issues, basically who is sending data to who. But Malcolm assured us that there are definitely some developing protocols which would kind of nullify this issue. We also talked a bit about different loopholes and how the whole travel rule will affect the big investors. And I think that some of it was those loopholes are not really exploitable as some people would think they are. And also our guests are a bit skeptical that travel rule would in any sense affect, let's say, crypto prices rising or big investors. Whew. So I hope I summed up at least some points. Does anybody have anything to add in the end. You're definitely welcome.
We've taken you quite over time. So I just want to say that I really enjoyed the discussion. Thank you so much for having us and these experts in the field. And it was a delight to talk to everyone today.
I would like to echo that sentiment. If a FASP were to go out, look at a solution, look at a protocol, not only take into account where your customer's PII is going to end up, but also take into account where your business sensitive information is going to end up. If it is a centralized solution, everybody listening in on that centralized solution is going to learn about your business. That might be okay, but be cognizant of that. Final takeaway.
Yeah, thank you for that. But it was a real pleasure to talk with you all. I think it was a great discussion and a really great first webinar for KYC AML Guide. So thank you so very much for being here and for all the listeners as well. And I hope to see you again, and definitely best of luck to you all.
Definitely. All right. Thanks for having me.
Thank you.
Cheerio.
Bye-bye.